Hello everyone, this is Research on Investments and today's topic is Apple. Let's find out if it's losing its shine. The company is facing stagnant growth, slipping iPhone sales in China, and hefty EU fines. With competition heating up and regulatory circling, let's dive in to find out whether it is worth buying based on today's prices. Before going any further, I would like to mention that it takes a lot of effort to create these videos, around 20 to 30 hours each. So if you find them helpful and want to see more, please consider giving a thumbs up and subscribing to this channel. Your support means a lot. So let's dive in. In this video, I will be going over earnings. An Apple recent earning report was a bit of a mixed bag. The overall sales growth was slow, only 2.1 or $120 billion. The culprit, stalling sales of their products like iPhones, iPad, Macs, which makes up most of their business. Here's the segment revenue breakdown. However, there's a silver lining. Apple's services like Music, Apple Store, and iCloud are growing quickly, reaching almost $23 billion this quarter. This is good news because these services are generally more profitable than selling devices. However, there's a silver lining. Apple's services like Apple Music, Apple Store, iCloud are growing quickly, reaching almost $23 billion this quarter. This is good news because these services are generally more profitable than selling devices. Here you can see the gross margin, which reached all-time high of 45.9% in this quarter, with both services and products achieving record profitability. Even though sale growth is slow, Apple is making more money than ever before. Their profit margins are at record high thanks to its focus on iPhone efficiency and its service business. This translates to impressive profit and ton of cash on hand. The big question is whether Apple can keep growing its sales. Investors are worried that Apple relies too much on iPhones, and if they don't come up with new hit products or expand their services business even faster, their growth might stall. So while Apple is making a lot of money right now, investors are looking for signs that company can keep growing in the future. Now let's look at some of the other risks. Even though sales growth is slow, Apple is making more money than ever before. Their profit margins are at record high thanks to its focus on iPhones and a more efficient services business. This translates to impressive profits and ton of cash on hand. The big question is whether Apple can keep growing its sales. Investors are worried that Apple relies too much on iPhones, and if they don't come up with new hit products or expand their service business, their growth might stall. So while Apple is making a lot of money right now, investors are still looking for signs that company can keep growing in this future. Here are some of the major risks worth looking at. So Apple's recent stock price decline might be due to its disconnect between its valuation and its financial performance. While the stock trades at a premium compared to its broader market, which is a PE of 27, its recent growth hasn't justified this high price tag. Revenue growth has been sluggish over the past 2 years, falling below 1% annually. This slow growth is even more concerning when considering that sales have actually shrunk by $2 billion between December 22 and December 23. To make matters worse, Apple's operating income has also stagnated for past 2 years, indicating a slowdown in profit growth as well. These factors combined paint a picture of a company that's not living up to its expectation priced in its stock. Furthermore, the recent bad news, we found that Apple grip on China's market seems to be loosening. Here's a breakdown of the challenges that they're facing. Government scrutiny. The Chinese government decision to ban Apple devices in some government agencies sent shockwaves through the industry. This could indicate a shift in government preferences towards domestic brands or potential security concerns. The second risk is Huawei's resurgence. So Huawei is a major China's phone manufacturer is making a strong comeback after facing US sanctions. Huawei offers competitive features at potentially lower price points, swaying budget consensus Chinese consumers who might have previously opted for iPhones. And the third risk to look at is sales slump. Reflecting these challenges, Apple's iPhone sales in China have taken a significant hit. Initial reports indicated a staggering 30% drop in the first week of 2024, with more recent data suggesting it's still still concerning 24% decline in the first 6 weeks. More troubling is Huawei's comeback with 64% sales increase over the same period. This suggests Apple is losing its appeal among Chinese consumers, which are increasingly returning to Huawei's offers managed to combat the US imposed semiconductor restriction to extent. It comes down to price wars. To stay afloat in this competitive landscape, Apple and its reseller have been focused to offer aggressive discounts on iPhones. Estimates suggest reduction exceeding 10%, which could erode profit margins and potentially cheapen the brand image. Now, there's market sections in China. Once a land of explosive growth for Apple might be reaching a saturation point. After a decade of tripling sales between 2012 and 2022, China's market premium for smartphones might be filled. This, coupled with the rise of strong domestic competitors, is leading to a decline in Apple's overall sales in region. Another thing to look at is the impact of these challenges poses a serious threat to Apple's future growth in China. While China still holds significant importance, accounting for 17.4% of sales in Q1 2024. A once reliable growth engine is now turning into a drag. The road ahead for Apple needs to adapt and innovate to regain its footing. This could involve developing more competitive pricing strategies, introducing features that resonate with Chinese consumers, or potentially even more expanding its product offering beyond just phones. And these adds up to a big problem for Apple. China used to be a huge growth market for them, but now sales are actually slowing down. While China is still an important market, Apple needs to figure out how to deal with these challenges if they want to keep growing there. So Apple's services business, which includes things like Apple Store, iCloud storage, and Apple Music, have been a real money maker for the company. Over the past 10 years, this part of Apple business has grown consistently by 20 to 25% each year, bringing it in a healthy profit. This is a great news. However, there are some clouds on the horizon. Regulators around the world, especially in Europe, are getting more suspicious that Apple might be using its control over App Store to give itself an unfair advantage and stifle competition. For example, they recently fined Apple a hefty £1.8 billion, which is $2 billion, because of the concerns that Apple favors its own music streaming service over others in Apple Store. This fine makes 2% of Apple free cash flow, which is, in my opinion, is quite a lot. This could be a sign of things to come, with new rules and regulations potentially forcing Apple to change the way it operates the Apple Store. While services business is doing well now, these regulatory challenges could make it harder for it to keep growing as quickly in the future. As for Apple's dream of building a car seems to have hit the brakes. Report says that their selective car project, never officially announced, have been scrapped. There are whispers of two main reasons: a shift in resources toward artificial intelligence or AI, and struggle to create a car that might Apple's high standard. There are whispers of two main reasons: a shift in resources towards artificial intelligence or AI, and a struggle to create a car that meets Apple high standards. It's likely a combination of both. Maybe Apple, having tried and failed with TVs in the past, realized they couldn't disrupt the crowded car market and decided to focus their energy elsewhere. It's a surprising turn considering massive size of car industry. With Apple's huge sales figures, a car could have been a significant moneymaker. Another news worth mentioning is Apple's court battle, which they lost with medical technology company called Misumo over blood oxygen monitoring technology in Apple Watches. To comply with court ruling, Apple removed the blood oxygen feature from its Series 9 and Ultra 2 models, which are sold in the US. This wouldn't affect existing watches or those sold outside of the US. Apple disagrees with the decision and it's appealing it. While Apple Watches sales are a smaller part of the business, but they are an important anchor of their wearable segment. Last but not least, I wanted to add, it's not fundamentally significant, but I believe might be worth mentioning. Apple's largest shareholder, Warren Buffett, Berkshire Hathaway, recently reduced its stakes in the company by 1%, selling 10 million shares in Q4 2023. While Berkshire Hathaway still holds a significant portion of Apple, level, which is I believe around 10%. If they continue to sell their shares, it could dampen investors' sentiment and potentially impact Apple's stock price. However, let's shift gears and look towards the future. Despite the setback where Apple might be headed, let's look at their competitive advantages. First one being Apple's AI development efforts compared to its competitors, particularly Microsoft. While Microsoft has taken a leading role in AI through its collaboration with OpenAI and its incorporation of advanced AI models like GPT-4 LLM into its products, Apple is seen playing a catch-up role. CEO Tim Cook recently highlighted that the importance of AI for Apple signal a shift in focus towards internal development of generative AI. This article outlines various AI features Apple has introduced for its developing Apple Music, the introduction of Apple Discovery Station, while utilizes machine learning algorithm to personalize music playlist recommendations based on users' listening pattern. Another thing to look at is Deep Fusion. It features in Apple's latest iPhone model that leverages machine learning for pixel processing and texture optimization, resulting in enhanced photo quality by analyzing multiple shots and selecting optimized pixel individually. Another thing is visual lookup. An iPhone feature that detects objects using the device camera and retrieves information about them by comparing their features and database of similar objects. Another is Apple Watch. Includes functionalities like fall detection, crash detection, which utilizes various sensors and data to infer the wearer's speed and positioning for safety and health monitoring. Another to look at is Siri, Apple's voice assistant, which utilizes deep neural networks for voice recognition and speech conversation. Last but not least, autocorrect powered by a transformer AI model that learns user text pattern to predict next word or phrase more accurately. Despite these advancements, the article suggests that the Apple's AI development primarily focus on enhancing existing products rather than introducing groundbreaking innovations. Competitors like Spotify, Samsung, and Garmin offer similar AI-driven features, indicating that Apple's efforts are more about satisfying competitive than revolutionizing the AI landscape. In conclusion, while Apple is making strides in integrating AI into its products, its approach appears to be prioritizing incremental improvements rather than transformative breakthroughs in its AI technology. Let's go into some of Apple's unique advancements in AI that Apple has introduced and is reportedly developing, such as Vision Pro and Xcode AI. Xcode AI empowering developers. According to Bloomberg's report, Apple is integrating AI tools into Xcode. These official development software for creating apps across all Apple platforms. These AI features could revolutionize coding by suggesting and even more predicting lines of code, as well as converting code between different programming languages. This has the potential to significantly save developers' time. Competitors are being drawn to Microsoft's GitHub Copilots, an AI system launched in 2022 with over 1 billion users. While Xcode is free and open source, developers can join the Apple Developers Program for additional resources, of course with an yearly fee. While the AI features wouldn't directly generate revenue for Apple, they could make the developer program more attractive, potentially leading to a wider variety of apps on the Apple Store and increased Apple Store revenue for Apple through commissions. Overall, this report highlights Apple's commitment to AI innovation, focusing on their recent launched Vision Pro VR headset and rumored AI integration within Xcode. These advancements may have the potential to enhance the user experience and develop productivity within Apple ecosystem. Another competitive advantage for Apple is its ecosystem. Apple boasts a massive install base of 2 billion devices, providing a substantial foundation for its AI endeavors. Notably, the active iPhone user base stands at a 1.46 billion, offering a vast market for AI-driven products like Vision Pro headsets. Leveraging its ecosystem, Apple ensures seamless integration and connectivity among its devices, enhancing users' experience and facilitating the adoption of AI-driven innovations. For instance, a Vision Pro headset can be seamlessly linked to Apple iPhone and integrated with other Apple devices, offering access to a wide range of Apple apps and services. In conclusion, Apple's extensive installed base and integrated ecosystem serves a critical enablers for the adoption and success of its AI initiatives, propelling the company towards leadership in the AI landscape. Furthermore, we have previously underscored Apple's branding supremacy as its leading brand amongst smartphone rivals. Despite its premium pricing, the Apple Vision Pro received 200,000 pre-orders, indicative of its strong market appeal. Moreover, Apple's consistent boosts high levels of customer satisfaction across its product range, including the iPhone 15, which had a 99% customer satisfaction, Mac had a 97% customer satisfaction, iPad had a 98%, and Apple Watch were 96 customer satisfaction as reported by Apple based on its 451 research surveys. Additionally, despite the contradiction in the smartphone market during 2022 and 2023, Apple's stable sales performance underscores the enduring loyalty of its customer base. As for Apple's long-term prospect, first one on the list is Apple's Vision Pro. Let's dive into it. In January 2024, Apple unveiled the Vision Pro VR headset in the US with a global launch on the horizon. During the company's earnings briefing, management emphasized two AI-driven components of Vision Pro. Spatial mapping, described by Apple as a spatial computing, allows devices to understand and interact with its physical surrounding through processes like 3D reconstruction using data collected from sensors, camera, and LiDAR technology embedded in Vision Pro. The data is processed by detecting neural engines within Apple's M2 chip, enabling real-time object detection and face analysis. Additionally, Apple Vision Pro incorporates hand and eye tracking features, utilizing cameras and infrared sensors to capture user gestures and interactions with the virtual environment, further enhancing its capabilities such as pass-through mode, while overlaying virtual reality with physical world for seamless interaction. Let's dive in further and figure out its potential revenue opportunities surrounding Apple's cutting-edge AI innovation, focusing significantly on Vision Pro headset. While much of Apple's AI product lineup is still in development, Vision Pro serves an excellent case study for understanding the revenue potential in this space. First, let's take a closer look at extended reality XR market landscape. Meta currently dominates the space with a 49% market share, closely followed by Sony PlayStation VR 2. Microsoft also plays a significant role, albeit categorized under others. While comparing features among XR headsets, Vision Pro truly shines, offering spatial video recording, spatial audio, and virtual avatars and seamless video streaming or calling. It's a robust contender. But what sets it apart is its vast library of 1.5 million compatible apps, including 1,000 specifically tailored for Vision Pro. This extensive app support leverages Apple's renowned ecosystem strength, providing users with unparalleled versatility and functionality. Moreover, Apple Vision Pro innovative hand and eye tracking controller offer a remarkably intuitive and immersive user experience, setting it apart from its competitive. In conclusion, Apple's Vision Pro headset presents a significant revenue opportunity, capitalizing on its booming of extended reality headset market, and leveraging Apple's ecosystem strength and innovative features. In essence, I believe Apple focuses on AI as primarily geared towards enhancing the overall functionality of its existing products and services. I've outlined various AI advancements made by the company, which I consider to be more generalized improvements aimed at maintaining competitiveness in the market. These include features like AI enhancements in iPhone camera technology, personalized music recommendations, safety detection features, and falls and crashes, improved autocorrect and voice assistant. However, I've also identified notable AI innovations such as the recently launched Vision Pro headset and reported development of AI feature within Xcode. Additionally, there have been reports of Apple working on other generative AI tools like Apple GPT, which could potentially function similarly to Microsoft Copilot and Google's Gemini. Despite these reports, Apple has yet to provide extensive detail on these developments, having only conducted an AI summit in February 2023 to to brief employees on the progress of its language learning model, which is LLM. Furthermore, according to the reports, Apple is in the process of developing its own language learning model with approximately 200 billion parameters. While the figure may seem substantial, it falls short in its comparison to its industry players. For instance, OpenAI's GPT-4 model boasts over 1 trillion parameters, setting a new benchmark in the field. Similarly, Google's Switch NPALM2 and LLM model surpasses Apple's reported parameter count, standing at a 1.6 trillion and 340 billion respectively. NVIDIA and Baidu also offers LLM models with larger parameter counts. Although Apple has not officially confirmed these figures, the reported development aligns with the company's broader efforts in generative AI. For instance, improvements to iOS Spotlight as integration with Siri are said to be incorporate LLM technology, enhancing search capability and personalization. Additionally, Apple is rumored to be exploring AI-driven enhancement for Keynote's presentation. More, Apple has released AI models like MLX and MGI, catering the developers' need for training AI model using Apple silicon chips and text-to-image conversions. Overall, while Apple's LLM model appears to be a lag behind competitors in terms of parameters, it aligns with the company's strategic focus on integrating AI across its product ecosystem. Let's break down the comparison of chipsets used in various XR headsets. Vision Pro utilizes Apple proprietary M2 and R1 chipset. MetaQuest relies on Qualcomm Snapdragon XR2 Gen 2 chip. Pico ByteDance also employs Qualcomm Snapdragon XR2 Gen 2 chipset. Microsoft HoloLens, powered by the Snapdragon 850 Microsoft HoloLens, powered by Snapdragon 850. Upon examining these performance metrics of these chipset, particularly the Apple M2, Qualcomm Snapdragon XR2 5G, and Snapdragon 850, the superiority of Apple M2 becomes apparent. With its advancement 5nm lithography, sizable cache and memory of 220 MB, megabytes, and a potential 10-core GPU clocked at a 1398 MHz, the M2 outshines its Qualcomm counterparts in its graphic processing capabilities, garnishing impressive Geekbench scores for both single-core and multi-core performance. The M2 demonstrates exceptional prowess. Overall, Apple's M2 chip, originally designed for MacBook PCs, exhibits remarkable performance compared to its Qualcomm chips tailored for XR headsets applications. Despite its superior capabilities, the M2's high power consumption may impact device battery life. Nevertheless, Apple's strengths including its extensive install base of devices, ecosystem integration, and loyal customer base, position the company for success in AI development. The premium pricing strategy employed with these products like Vision Pro headset underscores consumers' willingly to invest in Apple's AI offerings, potentially yielding higher revenues. Additionally, the robust chipset performance exemplified by the Vision Pro enhances Apple's competitiveness in AI development. While challenges may exist, such as reported smaller size of Apple LLM compared to its leading competitors, the company's approach and technological advancements bode well for its future endeavors in AI. Now let's evaluate Apple stock. Let's see, market cap sitting around $2.98 trillion and enterprise value, okay, it's almost the same. Let's see, PE is 26, it's a bit expensive for me, I believe. 25.27, okay, yeah, even the forward PE is a bit expensive. The gross margin and profit margins are actually not they are actually pretty good. So are the, obviously they have a ton of cash, so obviously they can take care of their liabilities as well. Their return on investments are crazy. And let's look at their key metrics actually. So there have been negative, okay, so they've been purchasing shares quite a lot, so this is actually good for shareholders basically. Cash flow, that's crazy. And their liabilities over 5-year cash flow is actually really good too. Yeah, these two metrics might be in the red, but doesn't mean that it's not worth looking at. Their 5-year return on invested capital which is crazy as well. So let's dive into let's use discounted cash flow model. So my assumptions are basically a bit low, middle, high. So I'm gonna assume let's say 10% free cash flow growth, 4%, and I'm gonna make it a discount of 11%. Let's see. So it gives me a fair value of $116.95, and the current share price is $173. So conservative approach. So let's say middle number are 15%, so $143 and $51. So it's still a long way to go down from it. And then my highest is 20%. So if you believe in these assumptions, then obviously then you can definitely buy them, but it comes down to the individual who's willing to invest based on the assumption. You can try this tool by yourself as well and mess around to see what's your most preference as well. So, will I invest in Apple? In summary, Apple strategically integrates AI to enrich its existing array of products and services with particular focus on enhancing features like iPhone camera functionalities, personalized music recommendation, and safety detection mechanism. Despite these notable advancements, our attention is drawn to potentially groundbreaking AI innovations such as these recently launched Apple Vision Pro in 2024, alongside with anticipated developments like Xcode AI features and Apple GPT. I firmly believe that Apple is drives success in innovation AI products and development. With an expansive 2 billion device install base and a resilient and distinctive ecosystem and unwavering customer loyalty across various devices, Apple holds a commanding position in the market. Despite facing significant hurdles, including dwindling sales in China and regulatory challenges, Apple remains resilient with its formidable ecosystem. While recent market fluctuates seems warranted, the strength of Apple's loyal installed base cannot be overlooked as companies navigate its next phase of growth, fueled by AI innovation. Please note all of these are solely my opinions and analysis derived from my research. They do not constitute financial advice. Investing always carries inherent risks. I recommend conducting your own research through due diligence before making any investment decisions. This is from Research and Investment, and see you in the next video. Thank you for watching toward the end.